You must have the experience for you to say you want to be on asset team. Because if you don't know what you're doing there, this deal will be messed up. Finance is the backbone of the entire asset management. This is the bloodline of the deal. The next one is balance sheet guarantor. Now, this is very tricky because it just depends on who you're talking to. I've seen a lot of high net worth individual that want to use this to break an entire deal. I've seen very greedy people. I've seen very good people, and I've seen people that do not care. All they want to do is to view their portfolio. So I've seen cases whereby someone that's looking to help you out to be a KP will come and tell you, I need 40% of your entire split. That is the entire 100% of this deal. I'm taking 40% all because I'm signing on your loan. I've seen that happen. In short, it happened to us in 2023. It happened to us. We called someone to partner with us because we're also KPs. And the guy said for him to partner with us, must give you 40% of the deal. So this is real. These things happen. This is where some people take advantage of people, all because they have the network and the liquidity. So they want to use this to break the band. Let me put it that way. So you just have to be careful and look for people that align with your goal and people that are reasonable, because it's common sense. You should have common sense to know that if you take 40% of this, what will happen to the rest of the split, So ideally, between 10 to 20% is what I see other sponsors giving. 20% when it's a recourse loan. Recourse loan is a loan that the person guarantees it personally. That is, if peradventure anything happens to the deal, the property will be foreclosed and the person's personal property, they will also come after it. So that's a big risk for whoever is going to KP for you on a deal that is a recourse loan. In short, you hardly see people that do it because there's a risk to their own personal portfolio. They're exposed to so many things and all that. So it's important that if it's a recourse loan, you reward them as deemed fit, because it's not easy for anyone to say, because I want to KP for you, in case anything happens, I'm going to lose my own personal property. It's risky. So you just have to look for ways to compensate such. But if it's a non-recourse loan, 10% is okay for you to reward whoever is sitting on that or taking that position for you. Then the next is the asset management. I typically give this the highest because forget everything that we are doing. This can make or mar your deal. This part, in short, is too crucial. So for me, I make it between 30 to 40% of the deal, and that is dependent on the raise. So if I'm not raising so much money, I put a lot of the percentage on asset management. So let's say the raise is 3 million. I can say, okay, asset management 40%, capital raising 30%. And all that. But if the raise is a lot, let's say we are raising 12 million, 10 million, 8 million, I need to reward the capital raisers, people that are bringing in the funds for their efforts to motivate them to do better. So it's a thought process that I said, please, it's not standard, okay? So for the asset management, that is it. Then raising capital, I typically advise everyone on the team to raise capital. It just helps. But if there are people that have that technical know-how, they know how to raise money, fine. There's nothing wrong with it. I'm not a capital raiser, but we try our best to raise what we can raise and use our funds as well. You don't have to do it our own way, but that is what we do in Blue Ocean. So next, let me break down this asset management rule before I go into the fees that are attached to the common equity, because there are some fees that are not included here that the GP members take. So for the asset management, how can you determine how to structure your asset management team? Now, an asset management part is a special, not anybody that can just come and sit on it. You must have the specialized experience. You must have the experience for you to say you want to be on asset team. I've seen people, just because they are raising money, they just tell you the criteria for them to be on your deal because they are raising a lot of money is to be on the asset team. You put them on the asset team, they don't know anything. They don't know anything about asset management, and they're only there because they raise money and all that. It's sad, but it is what it is. That's what happens and all that. But asset management should be for people that understand the deal, because if you don't know what you're doing there, this deal will be messed up. So my asset management, I divide it into different parts. Although one person can actually do the entire thing, or two people. It does not require so many people if you don't want it to be. The more I am going higher, the more I am reducing the PQA asset management thing, because I'm noticing like it's not a job for too many people. It's for people that actually know what they are doing. Because the more crowd you carry, the more this just gets messed up. I know that when you're managing too many people, some people will hide behind people in quotes and you're not doing anything. So just put the right people in that place, or there's an option for you to outsource it. So you can decide that, okay, none of us on this thing, we don't have the experience, you don't know how to manage a property. Then I say, okay, I want to outsource it to BB, or I want to outsource it to Pavi, because Pavi knows how to manage properties. And you're paying a fee for that. It is allowed in a syndication, a deal like this for you to do. But in a case whereby you want to internalize it, maybe you have the skills and you don't feel like there's any need for you to outsource it, then you can decide to break it into this or smaller ways. So you can decide that, because let me tell you the key rules in an asset management for you to determine how you can break it is you have someone that is actually the asset manager. What is the role of an asset manager? An asset manager is a person that manages the property manager is a person that watches the trend of the market. His job is not limited to just the microeconomy, is also extended to the macroeconomy. So the person is watching what is happening to the market and projecting, and also being active to know the effect of how it's going to affect the property. The person is also taking strategic move to accommodate changes. Let's say, for example, you know that there's going to be a decline in a market. There's going to be a decline in population in a market in 3 years' time. It's the job of an asset management to know that in 3 years' time, based on what I'm saying, the trend that's going on, the market is going to decline. The call for the asset manager is to decide we need to sell now. So if you don't have that right person on your team that knows left from right, or knows how to read or study the market, economic plays a very good role in asset management, because you need to understand what are the factors affecting my deal. Let me give you an example again. I've said it on this group before, but I'm going to repeat it again. Something happened. An asset manager wanted to sell a deal. The deal was worth 13 million or so. I can't remember the exact amount. So we all bid for the deal, and he got 12.5 million from us. He got 12.7 from somebody else. The guy said he wasn't going to sell. He decided not to sell. Guess what? That was when the Fed started increasing interest rates. So the value of the property fell. So he brought the property 1 year after the time we spoke, and guess the amount for the property. Even at 9 million, that property was not worth it. So the job of an asset manager was to determine interest rate is high. It's going to drop soon. Are we at risk? How will that affect the value of this property? But because the asset manager was not exposed or is not experienced, he could not study the trend, what is happening. He just took a wrong decision, and he made the investors lose money, because they actually lost money because he didn't sell it for the 13. He went on a contract for 9 point something million. That was last year or last 2 years. I was just shocked. I said, this is an asset management issue. So you need someone on your road that has that technicality. You need someone that's close to the asset. Very important, boots on ground. Because if you're out of state and you don't have anybody close by to go check on that property, I can bet you things will go wrong. How do I mean? The property managers might come on your call, your Zoom call, and tell you nonsense. And you go there, you find the opposite. The role of the boots on ground is to go and check the general appearance of the property, check vacant units to see if those units are actually vacant, or if the property manager said that they were not vacant and they're actually vacant. These are things that boots on ground should be able to identify. So you're not just going there to snap pictures. You're not just going there. You're going there to have a conversation with the property manager, to engage with the property manager. You're also going there to look at those vacancies, look at problems, and report it back to the main team. So there's a role for boots on ground for you to identify that. Then the next one is the KP monitoring. And should be someone on your team that is monitoring variances, that is your profit and loss. This is the budget and this is the actual. Actual means what is currently happening on the property. What's the actual income that the tenants are paying? What is the actual expenses I'm paying? So you are comparing that with the budget. We've discussed budget on this asset. If you don't know what I'm talking about, go and watch budget. we discussed budget. So budget is what you put side by side with actual, what is currently happening. And before you started, you've already drawn a budget with your property manager. So that person is able to identify there's a variance. When I mean variance, let's say your electricity bill went up. The person needs to identify what happened. Why did it go up? Did they increase our unit cost? What happened? Is somebody using a power that they're not supposed to use? Those are questions you should be asking. So that's the person that will be identifying those issues. You also have someone on the team that is leading finance. Finance is the backbone of the entire assets management. This is the bloodline of the deal. Someone that understands numbers and someone that can reconcile your account. So definitely the property manager have the software that they use to account for property management. But the thing is, sometimes they can play a fast one. We've seen property management that's stolen from us. As in, I still saw it happen to us in September. We had to call in an auditor to audit that. So these things happen. Even 2 years ago, one of our property manager gave us a bill of 50,000 that we're owing them, only for us to audit them. The accountant on our team took up the job and started auditing them. I will find out that they were the ones owing us and not the other way around. So imagine if we didn't have someone that had that expertise, then that would have been an issue.